Tesla had a fundamental story plus S&P 500 excitement, okay? And why this matters so significantly is when it comes to S&P 500, like, basically it's a forced buy situation. If you are somebody that runs an index fund, let's say for instance, right, and you're somebody that's buying into an S&P 500 index fund, all the stocks get bought across that entire index fund, right? So that's an important part for somebody like a Palantir or Tesla or whoever could get in the S&P 500 over time was all of a sudden now you have a forced buyer come in. It's not just like random people like me and I don't know, buying Palantir stock or you guys or whatever, right? All of a sudden now it's institutions and it's massive inflows of money, sometimes millions, tens of millions of dollars in just a weekly period that wouldn't have been there if it wasn't for being in the S&P 500. So being in the S&P 500 is the holy grail. It is the holy grail of being a stock in the public markets, in my opinion. It is the Super Bowl. You get in the S&P 500, that's the Super Bowl, because now you have a massive amount of people that are basically just going to buy it, because so many people buy S&P 500 index funds. Like it's like the most popular, right? So that matters in an extremely, extremely significant way for Palantir. I think Karp's taking the stock price more serious. I know he probably acts like, he doesn't pay attention to it or whatever. And the reason being is not because he's like, oh, it's got to be $20 or I don't feel good about myself. But ultimately, you got to understand, a significant amount of the owners of Palantir are employees of the company. And so stock prices do end up mattering in a significant way to your employee force, okay? And I think this is just another reason why I don't think Zuckerberg cares that much about the short-term stock price, but I think he has to care now because, let's be honest, a lot of Meta employees are compensated with Meta stock. And so if your stock price keeps going down, it gives an overall bad vibe and feeling for your entire employee force, right? And so for Palantir, we know they've given tons of stock-based compensation to their employee force. And when your stock price is $7, $8, I mean, that's not going to make your employee force feel that, let's call it excited to go to work each day. They want to see that stock price at $15, $20, $30, $40, right? And then they really feel like they're making a change. They're doing a great job. So it matters in a very, very significant way, much more so than I think a lot of people realize because of stock-based compensation. If your employee force doesn't own any stock, then it doesn't matter. And there's a lot of companies out there that, their employee forces don't own that. But when you're a big tech company like a Palantir or a Meta or a Tesla, I'm telling you, your stock price matters significantly. And if it does well enough, I mean, some of your employees might end up leaving you over time because, they make so much money off stock. I know that certainly happened with Tesla, but it matters. It matters in a significant way, okay? Now, in regards to Palantir, and kind of my thought process on this, I really think, like, the next 6 to 9 months is really, I don't want to say, like, the last time to get in Palantir, because you always buy the stock in the future, but it feels like it's at one of those moments where you kind of have to add this stock if you are a buyer of this stock and add it as aggressively as possible here. Because if you're talking about this stock actually gets in the S&P 500, which it's a possibility if they can, continue to put up GAAP profitable quarters, and, they're going to be in the S&P 500 because of the market cap. I mean, I can tell you before you get into the S&P 500, there's a huge influx of people that start buying your stock because they're like, oh, they're about to get in. So as you get closer and closer to getting in the S&P 500, there's a lot of people that take advantage of that arbitrage. People took advantage of that arbitrage with Tesla, and there's people that in funds and investors that keep an eye just for the next companies that are going to be in the S&P 500, and they take advantage of that little arbitrage between the time period where it's like, oh, they might potentially get in, and the time they actually get in, because they realize once they get in, then there's a big forced buying that happens. Okay, so in regards to something like a Palantir, it's a much actually smaller market cap than Tesla was when Tesla got in the S&P 500. I mean, by the time Tesla got in the S&P 500, oh gosh, I'm trying to remember what Tesla's market cap was back then. It might have been 100 or 200 billion dollars. I can't quite remember, but I can tell you it was massively more than Palantir. That is 100% something I know. And so, don't be surprised if Palantir's stock price performs better and better and better over the next several quarters if Palantir can continue to put up GAAP profitability, continue to put up nice revenue numbers, and then you have this carrot out there that's S&P 500 inclusion. That's also when you start talking about stock going back over $10, $12, $14 again. Okay, so this is just something to kind of keep in mind here. It matters significantly. And last piece is for the fundamentals. Why does this matter at all for the fundamentals? It actually slightly matters for the fundamentals of the company. being in the S&P 500 is like huge for branding of your business. It means you made it. Your credibility goes up, and it goes up quite dramatically being in the S&P 500. It really does. When you become an S&P 500, it's like becoming a Fortune 500 company. You have that branding behind you, and it is powerful. And other companies, which, let's be honest, Palantir sells to other companies, right? And they sell to governments. They do look at that stuff. They do. They do pay attention to, the product and service. They do pay attention to, are you in the S&P 500? Are you that sort of credible company? It's like, getting in. Let's just call it that. You're getting in, and you made it. And so it does actually matter, and some folks do actually look at that and say, oh, is this an S&P 500 company? Oh, is this a Fortune 500 company? It's more exposure, it's more branding, it's more investment funds looking at you, being forced to look at you that wouldn't have looked at you before, to invest in you, and to look into your product. Because, gosh, maybe their product can actually help you as a business, right? Like, when you just are in that realm, it's huge. It's huge for you, okay? So, matters significantly. So, as far as me personally, I'm going to continue to use this year as just an aggressive adder of Palantir. And I might have bought more Palantir stock here today, folks. And just going to continue to add this one this entire year because I think once this one takes off, I don't think it's coming back. That's just my belief on it. Kind of similar to what happened with Tesla. And I'm not saying it's going to go up nearly as much as Tesla, but once this baby takes off, I don't think it's coming back to $7-8. That's just my personal opinion on this one, okay? Meta, super important for me. Obviously, it's the biggest position I have in the public count. It's a bigger position in the public count than even Tesla is, right? So this stock matters more than Tesla does for me, okay? Nearly $400,000 I have in the stock going into this earnings has been doing us great. It'll be doing us a lot better in future years, right? But when it comes to Meta, here's the situation, okay? We're going into earnings, and the valuation is not high for the stock. We're trading at about a 21, 22 forward P going into these earnings, so I feel very comfortable. For a stock like Meta, that is not high at all. This is a stock, in my opinion, should be trading at a forward P of around a 30, maybe a 33, something like that. For this sort of business model, with this sort of stability, with the long-term growth ahead, I mean, it's way undervalued. So that's one thing we have going for ourselves in relation to Meta here, okay? Now, the problem is, and this might surprise you, I'm actually expecting a double miss from Meta. A double miss, okay? Meaning they miss on the bottom line and the top line. Now, hopefully they don't double miss and they come through and they report great numbers and everything's fine as far as that goes. But I actually think there's a decent probability that revenue could be down 4 to 5%. There's a possibility. We'll see what Zuckerberg pulls out of his hat here. But the reason being is, although Instagram Reels has been taking off like crazy, there's always a lag to getting the monetization really going for Instagram Reels. And so therefore, I'm not super confident in this past quarter in terms of that. I'm more confident in the June quarter and obviously the fall time quarter as well in terms of kind of really getting that. But I'm not that confident in this past quarter. So I wouldn't be surprised if revenue's down even a little bit more than this. Okay. Now, the good news is they recently added the new blue check mark dealio in relation to Instagram. That's been taking off like crazy, but that's mainly going to hit in the June quarter, okay? So you're not going to get a lot of that to really affect this quarter that we were just completed here, okay? So for all those reasons, I'm like, I'm not super confident in the revenue number. I'm much more confident in the June quarter, okay? And as far as EPS goes, it's going to be a messy EPS because you got to remember, they just did a bunch of layoffs. There's a ton of one-time costs that go with that, and it's a nightmare, man. A lot of times Meta is going to pay out salaries, for employees ahead of time for all this that they let go. Plus, it's a nightmare, okay? So I'm expecting actually a double miss. If they come in with anything better than that, I'll be very, very impressed. I'm very confident in the June quarter. Very confident. The thing that's going to move the stock price more than anything, more than actually this past quarter, is what Zuckerberg has to say on that conference call. I can tell you that's what's going to be what really matters here. Because whatever Zuckerberg says in terms of are they planning more layoffs, if he says we're not planning on any more substantial layoffs at all, we're about done, that's going to be the best news ever for Meta. Over the past 6-9 months, everybody's wanted to hear Meta do layoffs. But now, everybody really wants to hear that like the layoffs are done. And the reason being is if Zuckerberg's kind of done with these layoffs here, folks, what that means is that means that the business is stabilized and they're likely trending back up again, okay? And so that's what everybody wants to hear. That's what I'm actually looking to hear. I don't want to hear that, yeah, we think we might have to cut another 5,000 employees to 10,000 employees. I want to hear Zuckerberg sound pretty confident that, yeah, we're done with all our big cuts now at this point in time. We're going to continue to strategically look at the business, see, the right employee force to have. But at this point in time, we feel comfortable with what we've done here. If I hear that, that's an off to the races. And then if he has great things and the CFO has great things to say about the June quarter, especially in terms of, let's call it advertisers coming a little more back online, Instagram Reels advertising's taken off, and then you have the new blue checkmark service, which is going to be a huge moneymaker for the company. You tack on all that, then we could be looking good, really good for the June quarter, and I'm expecting extremely strong third quarter and fourth quarter from Meta. Revenue growth and earnings per share growth. And so obviously, Wall Street's trying to get in front of this. That's why you're seeing such a move up in Meta stock price from $80-something to 200 plus going into these earnings. Because I think I don't think I'm the only person in the world that believes what I just told you there. Okay, I think there's a lot of Wall Street that also believes that. And so nonetheless, I wouldn't be surprised at all if Meta stock actually moves up quite substantially after earnings. And I don't mean within the next 24 to 48 hours after earnings. Really what I'm speaking of is really like, the following weeks and following next few months after earnings, especially if Zuckerberg sounds pretty confident on that call with no more major layoffs and business kind of getting in the right place, okay? So that's kind of my thoughts around Meta.